Let's take another look at the markets today. The Dow, S&P, and NASDAQ, Russell 2000 also all sinking on fears the Fed could be even more aggressive in its tightening. And all the volatility as Investopedia's latest reader survey pointing to the highest level investor concern since May 2020. Joining us now to break down the results is Investopedia editor-in-chief Caleb Silver. Caleb, no surprise, it's really a panoply of worries that we all talk about every single day that are really plaguing investors at this point.
Yeah, and 51% of our readers are somewhat concerned, if not very concerned, about what's going on. Very high anxiety right now. Any one of these issues, inflation, the geopolitical instability in Ukraine, rising rates, would freak anybody out. You add them all together, you're going to get a lot of anxiety. Somebody cue Mel Brooks, because that's what we're feeling right now.
I saw in one of the slides, though, that most investors do think that the S&P 500 will still go higher. I mean, not by a lot. I think it's 0 to 5% up. But still, that there are gains ahead.
Oh, they're always hopeful. And even when the market pulls back, even when we hit a little bear market in the NASDAQ a few weeks ago, very hopeful, always optimistic, always looking for opportunity. But they're freaked out right now. So they are kind of hiding out in index funds, hiding out in ETFs, hiding out in commodity ETFs as well, not doing individual stock picking, although they stick with their favorites, and their favorites are the biggest stocks in the world.
So let me ask you, how does your survey, are they a good prognosticator, or are they a contraindicator?
No, they're a pretty good prognosticator because these are retail investors. They're engaged. A lot of them are DIYers. Some of them work with financial advisors, but they put money to work. You have to in order to take the survey. But we always find that they're usually pretty freaked out is just when things get really bad, and then sentiment starts to shift a little bit, and they're the first ones in. So they're always looking for opportunities to take advantage of a down market or of a volatile market.
And Caleb, where are they expressing that they're feared that we're in bubble territory? And where are the trades that I think look overextended, even after we pulled back and even after they're so bearish? And maybe the contrarians in us think that those are places to go invest.
Yeah, well, they always like the home cooking, the big mega cap tech stocks. So those have always been their favorites. They've been adding some oil. They've been adding some pharma over the past few months. So we've seen that happen. But pulling back in general from individual stocks and either not investing at all or buying index funds and ETFs, hoping to ride it out, hoping for the upturn.
Over half of invested readers believe there is a bubble. It's 54%. Residential real estate, 31%. Bitcoin, NFTs, Doge, EVs. These are all things that were loved by the retail investor not that long ago.
Yeah, and just a few months ago when I talked to you in the last survey we did, they were worried about bubbles in the stock market. That got taken care of. They were worried about Bitcoin. That got taken care of. Now it's real estate, and you can understand why.
All right, Caleb, it's always great to see you. Thank you for coming by.
Thanks for
Our
having me.
second live guest here at the NASDAQ. It's a big night tonight. We got a lot of people here.
Momentous.
Except for one person, Guy Adami.
What's up, Guy? What are you doing?
What do you make of how the retail traders feeling? I mean, retail investors have been a force in the market, we have learned.
Force in the market. They've also been astute in some of their buying and selling habits, without question. You can't be underestimated. And say what you want, they've become a force in this market, and you have to take some of the things that Caleb talks about specifically into consideration when you're making decisions. So good for him and his work. More importantly, good for the DIYers. Is that what he said? I don't know what that means, but good for them for getting involved in the market.
Yeah, well, the other thing I'll just say is he said, where are they hiding out right now in indexes and ETFs? And I think that's really interesting. I get asked the question all the time, if the market were to come in precipitously anytime soon, what would you do? And I'd say Qs and twos. I'd say the NASDAQ 100, the QQQ, because you're going to get those mega cap names. Those are going to be proved to be recession proof relative to the other stuff. And then you're going to get all those dozens of names in the Qs that have basically been cut in half or more. And then twos. I just don't think Treasury yields are going up meaningfully from here. And I think that's the 60-40 like sort of thing that we do.
Something like that.